Hello traders, this is a Tradesight Market Preview for June 14th, 2013. That's a Friday to wrap up the week. This chart's brought to you by eSignal 11 as usual. We did a very key critical thing here on Thursday's trading on the S&P 500 that I want to keep everyone focused on, although it was on very, very light volume. It was a much lighter volume day than we've seen, and that's because of the quarterly contract roll of the futures contracts. All futures now, volume now pushed to the U3 contract on the ES, NQ, and other contracts. So in that roll, the volume tends to dry up for a day or two while the technicals of that market align. And so you do get a light volume day, which is a little more hazardous for trading. But what we did, despite the light volume, was kind of important. So let's take a look here at this S&P 500 index chart. And this is the trend line we've been watching that's been in place now since November. We look at the low back there in November, connected to the end of the year right here, bounced off of it in late February, bounced off of it in March, broke it temporarily in April, and we thought maybe that was going to be the trend line break. But the key on any trend line break is the following components. Break the line and close beneath it. Get a next day confirmation downward with a little bit of volume that shows that the market's actually getting a little worried about the break of the line. You can then trade for several days lower if you want, but at some point you should then come back up and test the line from the beneath. And if you then failed, then that's the confirmation, that's the end of the trend. So as you can see back in April when we got the close here, and the next day was back up. Within 2 days we were back above the line. So there was never a confirmed break. We got another break back earlier in June, and you can see we got the 1 day closing down below the line after 2 days sitting right on top of it. Market's been very hesitant. It just feels like the bulls are losing control. And by the way, I do want to point out this really big day where it was an outside day down on the S&P and the NDX on the heaviest volume of the year right here. This was on May 22nd, I believe, and that big outside day down can often represent a top, and the fact that it was on volume just in general suggests that the character of the market's changing. And ever since then, we've been selling off gaps pretty significantly. So we hesitated a bit at this trend line, got this down day and broke underneath, but the next day again bounced right back, and the next day after that we were back above the line. So still no confirmed break of the trend line. However, this week, a little different story. Monday we just hung out up here above the line. Tuesday we finally broke the line. Wednesday we headed lower in the afternoon on volume. There's your confirmation of the break. So now you could trade lower if you wanted, but the main point is at some point in time we need to come back up, preferably on light volume, because that's not very positive for the market. Preferably on light volume, and retest the line, and that's exactly what we did today. We actually got an outside day up, meaning today's range encompassed the range of the prior session, which would often be bullish, but the volume was so light it's questionable. And the fact of the matter is that after the sell-off we saw Tuesday and then the confirmation Wednesday, we crawled back up here on no volume exactly to the line. So this is really the point. We can kind of, if we stall out around here, maybe Friday because it's going to be a Friday, because it's going to be a light volume day, go nowhere, and then start to roll over next week, that's going to be the confirmation. And we're going to watch this static trend line, this red line right here. But if we lose that, we're going to ride down on the S&P. That's going to make a lot more interesting for us on the short side after playing the market on the long side for a while. So there's nothing that says it has to happen, but we finally have the second piece out of 3 phases that we need to confirm the trend line break in place. The last 2 times we tried this, we only got through the first one. So this is a little closer. The character of the market certainly has felt different, and today was the only day where it kind of felt like, oh, look, the market's rallying, and that's despite the fact that Japan was off sharply. But again, this is just how it kind of has to play out, and the fact that there was no volume due to the options contract roll or the futures contract roll means that this really could be the roll that we've been looking for. Now, I just want to point out the Nasdaq, also the Nasdaq 100, which a little different picture this year. There's not really an uptrend line, but I will point out that topping day right here. Okay. And by the way, these 2 asterisks, if you guys are familiar with our Seeker tool, these would have been 13 sell signals, except for the fact that they have to be above the 8th bar of the count using the qualifier. So other than that, these would have been sell signals right here, on Seeker sell signals. And the last time we actually got that on the NDX was back in January, kind of a weird one back in January, and it did flatten the market for a while. But here we've got a sell signal in place if you ignore the qualifier that's there, and we've been rolling ever since. So just something to keep in mind. Let's take a quick look at the data that's coming out. You can see what we saw on Thursday. Initial and continuing jobless claims, basically right in line. Retail sales came in a little a little high on the main retail sales number. Okay, import-export prices came out, business inventories, natty gas. But here's a look for tomorrow. PPI expected somewhere between 0.1 and 0.2%. Same with the core PPI number. Got current account balance. That's all at 8:30 a.m. Eastern Time. Industrial production capacity utilization at 9:15. Michigan sentiment for June. That's the first look, and that's 83 or so expected. That's at 9:55 a.m. Eastern Time, or whenever the kids get up, as we like to say. So that's what we're looking for Friday. It is a Friday. Things are going to drift off in the afternoon. Might not be a tradable afternoon as usual, but the morning, there's enough data. Hopefully we get something. Main caveat, of course, is that futures contract roll, which is going to have a lot of big money out of the market until we get to next week. Next week, as a preview, we do have options expiration. It is a triple expiration week, and we have a Fed meeting. So we have a Fed announcement on Wednesday. So more than likely, the big movement next week will be either late Wednesday or Thursday for options unraveling. Friday next week can be very, very dead as well. And we're in summer Fridays anyway. So that's the way we see it. We'll be calling it in the Tradesight Trading Lab as usual. Hope you have a great trading week.